Welcome back. You're watching the Lunch Hour. It's a packed show for you. The economy is in focus, and joining me now is Roopa Kudva, MD and CEO of Crisil. Of course, Crisil has been in the news for acquisitions, but we will come to the acquisition of Coalition in a bit. Roopa, my first question to you is on the economy. You were sitting in when Sonal was talking about the bleak outlook. What sense are you getting really? What would you list as your biggest concern right now?
I think the macro picture we are saying is that we are heading for a period where growth rates are going to remain flat this year. We are forecasting that GDP growth will be 6.5% in 2012-13, the same level as it was last year. I think four principal challenges. The first is fiscal deficit. Deficits continue to be high, and with lower growth, we believe that the fiscal deficit this year will go up to 5.8%. The second area is inflation. While inflation will come down from last year's highs of 8.8%, we are still saying it will be around 7% or so, which is way above the comfort level of policymakers. So inflation continues to be an area of concern. The third issue is the lack of investments. And I think the investment climate and the demand for investments is weak because of the issues relating to policy. Lack of adequate clarity on things like acquisition of land, linkage to fuel supply sources, environment clearances. All of these are having a dampening effect as far as inflation is concerned. And the fourth area of challenge for the economy is the currency, the volatility of the currency as well as the level of the currency.
You know, in some senses, a lot of these issues get exaggerated when the outlook is bleak, especially on the investment front. How would you compare our readiness to meet the challenges right now compared to 2008, 2009 when the last crisis hit us? Are we worse off?
I think three differences this time. And I'm looking at our own data and our own analysis. If you look at our own data and you look at Crisil's default rates in 2011-2012, they reached an all-time high of 3.4% of the portfolio, which means 188 companies out of our total of 9,000 companies defaulted last year. So that number clearly is at an all-time high. The second interesting difference is that of in restructured assets. So if you see what happened for the restructured assets last time, they tended to be mainly for the small ticket accounts. This time we are saying that over a 2-year horizon, 2011-12 and 12-13, the restructured assets will touch 2 lakh crores, and 65% of these restructured assets will represent loan sizes which are above 1,000 crores. So it's the larger accounts now which are being restructured compared to last time. So these are the two main differences between what happened post-Lehman and what's happening now.
In fact, I have a copy of your report, Roopa. It is worrying because when you talk about such big ticket loans getting into a problem zone, you're talking about some of the biggest corporations in India, which means that they are the people who would have otherwise invested, and they're not likely to invest if so much of their loans are going to come up for reworking.
Indeed, we are, it is principally the larger companies which are getting affected this time. Also, we are forecasting an increase in the NPA levels of the banking system to go up to about 3.2% by March 2013. However, for the banking system as a whole, we believe that there's not too much cause for concern because the banks in general are well capitalized and we believe they can take the stress. I think the bigger issue really is that if investment demand doesn't pick up now, what happens to GDP growth a couple of years down the line?
But Roopa, more immediately, between January to March, there was some bit of a freeze that one got a sense of in the banking system. Everybody was waiting and watching and not making that investment or giving out money. Now, if this is the situation, working capital seems to be a big issue in most corporations that we are talking to. Is that a growing concern about regular operations right now?
You mean banks' willingness to lend for working capital purposes? We haven't come across that on a consistent basis. I think that yes, there are some companies which have liquidity issues, but that relates more to a lack of good planning as far as their capex, etc., is concerned. On a systemic basis, we rate 9,000 companies and we rate 35,000 SMEs. I don't see lack of willingness of banks to lend for working capital as an issue that has come up.
Okay. If you were to look at the large block of restructured loans that are going to come up, which are the sectors that are most susceptible to this? By when will you see this whole CDR business start really gaining momentum? Because we've seen it in pockets like infrastructure right now.
Well, at this point in time, sectors in general in the economy that are stressed are airlines. You have sectors like the real estate, commercial real estate sector, which is seeing some signs of stress. Power, particularly two areas in power, which is the distribution companies, as well as the new projects in the generation side, are particular sectors which are seeing greater stress at this point.
What is Crisil's role going to be? Because you've done an interesting acquisition right now of Coalition, which is really a an analytic play in terms of the kind of work it does with companies. What's your role going to be through this period?
I think Crisil has seen an interesting change in its business mix over the last decade. Half our revenues today come from outside of India, which comes from our non-ratings global research and analytics business. So our research business today is half our revenues. Ratings is about 40% of our revenues, and 10% is our risk solutions and infrastructure business. So our global research and analytics business, where we work with global investment banks, has been an important part of our business for several years now. And the Coalition acquisition, Coalition is going to be a part of this business. Just like Crisil works with global investment banks from our research centers in Poland, Argentina, China, and India, Coalition too works with global investment banks. But what Crisil does currently is that we target the trading and research functions of the investment banks, whereas Coalition is working with the CEO's offices and the strategy part of the investment banks. So we think it's a nice addition to our service offerings.
It's a value add.
It's a value add, it widens our service offerings, and that's why we feel the company is exciting.
So you do well no matter what happens to the economy, right? Because there is a lot of strategic thinking that goes in at a time like this.
I think we have tried to diversify our portfolio and not be over-dependent on any one business. The second reason, Many, is that we learned in late 90s when we downgraded several of our clients that it's very important for us to be financially strong. It's very important for us to have a diversified portfolio in a non-conflicting manner, which allows us to be truly independent in our ratings business, and hence the strategy of diversification.
Let's get back to the macroeconomy, Roopa. Right now, we just heard Sonal talk about, even if there is a rate cut, it's very difficult to actually see how it's going to pan out. Now, a lot of the corporate debt restructuring is also based on a horizon where you have rates coming down and you can possibly, rework debt accordingly. At this stage, is CDR itself going to be a big challenge, or are the horizons for, settling of balance sheets going to take that much longer?
I think we'll really have to wait and see how exactly the CDRs pan out. I think there are many moving parts. As far as rate cuts are concerned, we think that there is not much room or flexibility that the policymakers have for a rate cut. At the end of the day, you still have inflation at 7% levels. There are particularly intractable issues with regard to inflation. Food inflation, we believe, is a supply side issue. Even though oil prices have come down, you still have a currency that is weak. We are still faced with possible inflationary pressures coming out of diesel LPG hikes, coming out of possible increases in electricity tariffs, and also some other changes like this can have an impact in terms of fueling inflationary pressures. Given all this scenario, I think it's hard to see a situation where inflation comes down, and therefore hard to see a rate cut.
So corporate India, it is looking rather bleak. There possibly would be more downgrades going ahead, given all these pieces coming together with a structural problem in the economy.
The trend of downgrades exceeding upgrades had already started in the second half of last fiscal, and we expect that to continue this in the first half of this year as well. However, corporate performance, we think, last year itself we saw revenue growth of key corporates across 26 key sectors in the economy come down to 18%. We saw EBITDA margins dropping by 200 basis points to be 19% on an average, we actually don't see the EBITDA levels going down further from this level.
So it's cost cutting, tightening belts is
I think it's
working?
a combination of the easing of commodity prices in many cases. I think that has a role to play. Rupee depreciation is helping export-oriented sectors. So combination of both these issues, we believe the pressure on EBITDA margins will not be so high this year.
That's fascinating, Roopa. You like a storehouse of information, but we will have to end it over here. Thank you. Lovely having you over in our studios to talk about the economy and Crisil's plans. Thank you so much for joining us today.
Thank you so much.
Thank you.